Alright guys, welcome back to another video with me. My name is Dustin Myers for those of you that are new here. And if you are new here, I do make videos a lot about, mostly the stock market. And then there's also a little bit of finance in there. I'm just kind of slowly working my channel out and, making videos as I go. So in this video, we're going to actually talk about how to bet on earnings. And if you do or do not know, when you bet on earnings and you buy calls and puts specifically, you kind of get hammered a little bit when the stock doesn't go, in the proper direction. So I want to give you a strategy that's going to basically take away a lot of that risk. But there's still that risk, obviously. But let's hop on my computer and let's show you an example and all that. So we'll see you on my computer. Alright guys, so if you want to just go for the gold and you really want to bet on earnings, this strategy that I'm about to tell you is probably, one of the best approaches versus buying a call or put. Because remember, if we buy a put and let's say the share price jumps like crazy, that put's going to be worthless. And if we buy a call, well, the share price might drop on earnings, whether that's before or after hours. We can't really control that because we can't just go and buy options after hours and then bet then it's, the next day we feel the pain of it or we feel the gold rush of it. So a better way to approach this and bet on earnings. And by all means, please do not go into this with a heavy balance. Like for somebody like me, I honestly would bet a couple $100 on it at the most because I don't like losing money, but I'm willing to just kind of take a little bit of a chance at it and go for it. But as I, become more wealthier and I grow my wealth, maybe every once in a while I'll just slap $1,000 on it and then make a bet because you can come out with pretty fat profits. So this strategy is going to be called a strangle. And basically a strangle is a combination of buying a call and buying a put at the same time. And how you profit is a humongous move in one direction. It can't be a small move. It has to be a very humongous move. And I'm going to show you an example of that on TD Ameritrade with the backtesting feature because I can't just show you an example right now. And I'm not, going to do that because it's just not a strategy that I haven't decided to implement. But, that's because it can fail. Every strategy is going to fail. So what you want to do, and this is very important here, because you can't just go, open a strangle willy-nilly and stuff and just pick any strike you want. So the key here is, so we would, buy an out-of-the-money call and buy an out-of-the-money put, but sometimes some people can't exactly afford to just go buy an out-of-the-money call or an out-of-the-money put or an at-the-money call or put. So sometimes you kind of have to expand it out a little bit. But, if, like, let's say we're picking, like, something like Amazon, the options are so expensive. So you couldn't just go open this. You'd have to pick something out of the money to afford it unless you're super rich. Then that's great because then you can afford it. But, for us poor people, we have to go a little bit out of the money, but not too far out of the money because there's no reason to. So the key here is, so I will show you the same thing on TD Ameritrade when I go through it, but on here, when we open a strangle, what we want to do is make sure the deltas are quite similar. So I'm going to uncheck that. So open these up and you're going to see the delta right here. So the deltas have to be really similar because we don't want one delta to overcome another delta because that'll basically make things go backwards for us. So we want to choose a very similar delta. So for the call that we buy, let's say we go with this one, it's out of the money decently, and then let's go and buy a put that's out of the money, and it has to have like that 19 delta. So let's just keep scrolling through here. So that one's, yeah. So right here, we would do the 63.5 put, and then we would do this, where is it? Right here, I think it was. Yeah, this $70 call. So we would pick these. That way, the deltas are similar. So that way the share price will move the same way. And, if you're not comfortable, doing that much money or something like that, I mean, this is like literally $100 bet. I think it is. So that's $44, and then, well, it's a little bit more than that. So it's, where is it? So 63.5, I believe it was. So this is a, yeah, it's not too bad. So it's like $100 bet. So like this is something for us people with small accounts. Like my account maybe isn't small to you, but for some people that only have a few thousand and they just want to make a bet, this is sufficient. It's not a big bet, so you don't have to worry about losing a lot of money. But how this works is like I said earlier, the move has to be dramatic, and I already went ahead and basically entered a $68 call and a $68 put. Now these aren't like how it's set up properly, but this is just a showing an example. But you'll see the real life example and how it works with earnings. Like literally the next day, you're gonna see like, whoa, fat profit. So as you can see here, the small little move, like let's say the share price. So right now the share price is $66. So if you get a move of just a couple of bucks and up to 70, within one day, you're gonna make a little $2 bill. So that's not a lot. But as you can see, if it moves up another $2, you make 126 bucks. And yeah, it kind of gets pretty fat. So, the dramatic moves are where you want it to be. So as the move increases, it takes a lot. Like you can see, it's not just a few bucks. Like you need like several percentage increases, and more than likely that is going to happen on earnings. There's unless you're really good at charting stocks and all that, this is definitely and I would only recommend doing this on earnings because a big move is going to happen on earnings. But like I may have mentioned earlier, if I did, sometimes earnings can be a move happens so quick and then it dies off in the morning, and then your options do decay off and you actually end up losing the strategy. And I'm not going to show you an example of that, unfortunately. I'm just going to show you an example of a dramatic move. So you realize that, it has to be dramatic. And you can see right here that it does have to be dramatic for you to profit. It can't just be a flat move. That's what, selling options is for flat moves. You need dramatic moves to win. And here is where I'm going to show you an example of that. Now, I went back in time where Pinterest popped pretty hard on its earnings report, and by that I mean like it popped like $10, I believe. So what we're gonna do is basically the same thing that I had mentioned earlier. I'm gonna go back in time here, like 20 minutes or something like that, and we'll just stick with this. So the share price might be a little lower. No, it's about the same. So what I'm gonna do is we're going to start by opening that put, but we're going to be buying a put, and let's say we got a little bit of money. So let's just say this is what we're going to get. And like I said earlier, I know that you can do it a little cheaper, but the cheaper you go, I think it's going to be a little less profit. I haven't gotten into that, but I'm just going to show you something that's closer to at the money. with the same delta. So we have to keep our deltas the same. So let's throw this in there for a 34 delta roughly. And this is the put we just bought. And then let's go over here and find a similar delta. So this is delta right here. So 34 right here. So we're going to buy it. This is going to be our call that we buy. Now, right now, we spent like $4,600 on that. So, pretty expensive bet. So, I definitely wouldn't recommend doing this if you have like not very much money. But this is just an example. So, we will go ahead off to the next day. I think I got the days right. So, this is the next day. Popped like crazy. So, wow. $50 to $67 a share. Now, it doesn't have to be that dramatic, as you've seen on the options profit calculator here. It didn't have to be that dramatic, but it did have to be a several dollar move. Now, this is like a luck of the average right here. So what happens is the put options, obviously they all went to zero, but the call options, they went to the freaking moon. So we basically just made $10,000 dang near in one day. We basically we doubled our money twice, kinda. Yeah, it looks like we just doubled our money. Yeah, I'm just gonna say we doubled our money. So, as you can see, Pinterest popped, but sometimes this doesn't always happen and doesn't last until market open. So like 8:30 the market opens and the profit taking has already happened, and then boom, there goes your $4,000. So do keep that in mind when you implement the strategy. But right here we close these options off, and as you can see, the put is like worth like 1 penny. It's worth 2 pennies, whatever. And then we close off the call that we bought for $13.80. So we paid like 200 some bucks for that. Yeah, we're pretty happy campers. So we just bet $5,000 dang near, and we made almost $10,000. That's pretty awesome. So it gives you an idea of a better way to bet on earnings, because if you bet on earnings and you buy a call or put, it usually decays, if you're not right. But this, you don't have to be right about the direction, but you do have to be right about the direction being dramatic. It's not going to work if it's not dramatic. So I hope that gives you, maybe another strategy that can help you bet on earnings, if you feel like doing this. But, I'm no financial advisor. I personally don't recommend doing that. My dog's licking water in the background, so I hope you can't hear that. But, like I said, not a financial advisor. This is not, financial advice. Just throwing that out there. But I hope you guys enjoyed the video, and maybe you can have some success with this strategy in the near future. But with that being said, thanks for watching the video. Feel free to hit the subscribe button if you haven't already and you're enjoying my videos. But anyways, that is a wrap. We will see you guys in the next video. Peace.